Good morning. Well, I think I titled it, Do You Believe It's a Bear Market Now? So many denial about this in the media anyway, what we see. But, just looking at the charts and seeing the size of this rounding top on the S&Ps and all the big green bar failures that we've seen, the shallow retracements, and I don't know when it'll be over, how far down it'll go, but at least we're closer to a level that makes sense. So I can say, look to the left. That was MT Live yesterday. The simplicity of it is amazing. It amazes. It shouldn't amaze me so much because I've been saying this for years, and the light bulb moment came many years ago. But the amazing part of it is all of the esoteric types of analyses that are out there trying to figure out where support and resistance is. And I used them all, not all of them, but many of them many years ago, until the revelation of the simplicity of just look over here and see where this congestion is. So anyway, those of you that are in the green room every day and here on YouTube, you see this, and you guys, and so many go to all these webinars that are out there with all of these fib levels and trend lines and so on, and what we see on CNBC is, when will the rest of everyone wake up? And they won't. All that crap sells, right? And all that marketing hype sells, so it's not going to go away. Just like get skinny taking this pill. Anyway, we're getting closer, right? You see the congestion here. The top area there has been pushed down through. There was a bottoming tail bar, which failed miserably. And so now this area down here, and it's an area, we don't get into exact points, but, one of the things that we all see over time is when the fear becomes a reality. And by that, I mean, the bear market, what determines a bear market? And they say, oh, if it goes down 20%. All right, so it gets down 20%. Now we're in a bear market. Now what? All right, well, down here, getting somewhere down into this green area there. Let's just put it on 20%, getting below 20%, 37, right? Look, McGraw's asking me 37.50. So I'm just moving this along here to see where 20% is. It's right at 37.50, give or take. Right? So somewhere in this area, you see this bottoming tail bar. Somewhere down there, as it pushes, I think below 3,800, could be 37.50. Who cares what the exact number is? All right, we just want to see that move to the downside, and then we want a range expansion bar. Right? So yesterday was a range expansion bar, but it came after a turn. These are range expansion bars, so this was impressive, and so we all saw it. And that rally day, if you look at it intraday, it was an amazing power bullish rally day. And then it failed miserably. And so we get this giant bearish 180 reversal. And that is confirmation of a bearish trend when a bar like that fails. Now we've got a wide range bar, but it comes after a retracement. So it's not an ending bar. What we want to see is, I don't know if we'll get this kind of a move, but something like that from here. It's at this low. So, we see the bounce off of that. But these algorithms, they're consistent. That's the good part about them. We need to trade more consistently, right? I mean, humans more consistently, like this is the concept. It's a swing low, buy down there. Now, we can't trade in microseconds back and forth like they do, so we look for bigger moves. But the idea of looking to the left and a retest of a pattern, even in a bearish trend, is going to bring in buyers, and you get bounces. So from there, the odds are that it continues, right, where we're looking for down here for the move on a short-term basis to end. Now, there's part that says, hey, we'd like it to end and things go back to the way it was, not this pandemic weirdo kind of thing. And you take that out of it, and then, you just got this bull market with normal corrections going on from back here in 2009, sideways correction, and then a little pullback. And it, well, it was more than a little pullback, but it retraced it anyway. And, liquidity saved the day, dumping money into it. And now all of that has come home to roost, right? All of that pumping money into there, and this new administration putting gas on the fire, inflation. And now they can't stop the runaway train. Well, they can, but they don't want to take the pain. So things will get more painful. I don't know where it'll end, but down here is where we would look for at least some relief within this bearish trend. And then we'll see where it goes. Now, 1999 and 2000 and 2001 is kind of fading from my memory a bit, but I think over the weekend, I'm going to go back and look at that, because the rallies that occurred, and everyone should do that, because that was a horrendous bear market. And so there are rallies along the way, and you should become familiar with the size of rallies that could occur and subsequent drops, because NASDAQ went down about 95%. Now, I don't think that's going to happen today, but you should become familiar with, a real bear market, because maybe a lot of people haven't seen that. Anyway, looking for things to go lower. I know it's going to stabilize here, because that's the way things work. This week's low overnight. Yeah, so McGrath saying we hit, just above that point there overnight, and things bounced up. So the algos and, look, short-term traders, like we do that, McGraw. Like we look for things to pull, they're pulling back a lot. And, we look for that stabilization and sometimes a little W bottom and so on to, to form and do a scalper trade. Nothing wrong with that. I like when they break the low and then that happens, but it doesn't always happen that way. But look, we look to the left like that. And if you think these algos don't know about looking to the left, think again. I mean, they step in there like Pavlov dogs with the bell going off. And that's the good thing. And the bad thing is they're going to sell almost immediately and back and forth until it turns. So now the interesting thing, which I mentioned in, to a little while ago in the room, we see the same similar thing happen here in the Qs. They're getting close to this area down here. And so we'd like to see that break down below here. And then look for a turn. The interesting thing is that the Dow, which has been showing relative strength, it broke down below this low before stabilizing. That's our greater than 100% retracement concept, and what I like to see before getting a bounce within a downtrend. And 30,000 or so, somewhere in here would be nice. Somewhere, anywhere into these green areas where these overlapping bars are, for the stabilization to occur. And so let's take a look at peak of our internals. And, we haven't, let me see if I got another one here. It was interesting yesterday, as things were going down, right? You take observation of these internals, what's going on. And what I saw was, I didn't see the fear. While the VIX was going up, where were the option traders loading up on put options? And I have one here of the day-to-day. No, it won't really show intraday. But, you could see here, here where it was peaking up to this area, it actually was lower. Jake's telling me they're doing June, which makes sense, but still, Jake, when you see these kind of drops like this, you do see those option traders that, on that particular day, just like we look to short or, they look to take advantage of utilizing put options, even for day trades. And they weren't doing that as an extreme. So I have alerts at 1.3, 1.5, because I know from experience in a bear market that option traders will bet on crashes in intraday. And that's all well and good. Everybody's looking to make money. But those levels, just like a tick, the ticks yesterday were under minus 1,000 on a consistent basis through 5-10 minutes or so during the selling. Good. VIX was trending up consistently. Good. We want to see option traders betting big time, and they weren't doing that. So that was one kind of fly in the ointment to an intraday bounce, and things trended down throughout the day. So we use, we discussed this in the room, we use these internals as if they're gauges on our car. Are we overheating yet? Right? Are we ready to blow up or push it to the limit? So we look, hey, the TAC is at 10,000 and the heat gauge is boiling over, and hey, I'm close to a tradable low here. And so that was one thing that was missing. So, and looking for things to go lower here, ideally. The Russell showing some relative strength, well off of the low here, but that's, was weak. It's got no support. We'll see if that gets lower. Looking at the Qs, we're still bouncing up here a bit. And where were they last night? 285 and change. It came down to the low. Buyers step up there. Right? Happens every time. How far they get it off of the low is the key. Right? How far does it retrace into this red bar from yesterday? So we'll look, how far can it get today? Spiders, same story. That's what Dan and I call the factory work. The things that we do every single day, because that is what creates the consistency in what we do. They're just foundational concepts that never, ever change. So spiders somewhere, down here. Bitcoin bouncing a little bit today, but that didn't go down as much as it could have. But led the way down. It's hanging here on the cliff. Keep an eye on that to see if it starts to drop or not. Crude oil down a bit here today. Just pulling back from that pivot up there. Let's see if it holds this level. Touch. Then you touch 4,000. It'll never get to 4,000 today, Jake. Did they start trading today? I know it was happening. I thought it was today, but I wasn't sure. Is today 0 DTE? Yeah, it started today. So we have 5 days a week, 0 DTE. And yesterday, things went down past where I thought they would. Later in the day, I did all the way down to 38.75, 30 wide, 40 cents. And it started like it was going down there, but, it was just so far away. I didn't think it could get down there. Luckily, it didn't. But once it broke 4,000 yesterday, I mentioned in the room, this can get nasty. You can see where the line is. So where is this low? 38.50-ish, 38.50 or so. Let's see exactly what it is. Data window. 38.58, 37.50. See, the problem is there's nothing to the left now, but 37.50. So, one of the ways that we come to some conclusions about these spreads, because credit spreads are just simply, I don't think it'll go there. How far did it travel yesterday? Where did it start its move from? And how far away is it? 37.50 would, and so we look at the size of this bar. And I'm taking a long time here, Dan. We're going to go over trades. Just kind of So yesterday, and don't exactly, that's about a 3% move yesterday, give or take. Projected down lower. Where does that put us? 37.53. I'm not so confident about not going there because in a move that starts down, to have a bar of similar size or greater than what started it is reasonable, right? So what's reasonable? So I would look to see if what's going on here this morning starts jiggling around and then starts to go down, and then something below 3,700. And of course, if there's a big open interest there, something below 3,700 should be a good trade. That's what I would look for. And I can't imagine getting to 4,000. I mean, I guess I can, but look, it's getting up there today after yesterday and this downtrend and starting to move. It's unlikely. And let me continue. Silver jiggling around here, no interest. Gold jiggling around, holding here. It is over here at this prior low. Transports nailed yesterday, right? And what else got nailed yesterday? The defensive stocks. So the realization of this inflation being terrible, why wasn't the realization there already? I don't know. Even institutions with all this money, they're caught long and they're in denial. They're getting murdered here. And the high probability of a recession coming is coming home to roost. And so this administration's goal of destroying this country on some level is coming home. And so all of this, even we get this level move down here and this bounce, I don't think this is over just because we get to an extreme level and have a tradable bounce. So more trouble coming. We'll see how this unfolds, in the coming weeks and months. To you, Dan.
Good morning. Yeah, we're bouncing here pre-market a little bit. First thing I do when I wake up, see where the futures are, and I was happy that they were down a lot. I'm like, good, bigger the better. Now they're bouncing here, so you heard Greg go over everything. We are extremely light in inventory. Which means that we took profits and everything the last day or two. Well, we only have Bitcoin short puts, and Bitcoin's actually positive right now at 500 points. So that's relative strength. And we're short MSTR puts. And I'm hoping we get a nice controlled curl here to add to it. We're short the $90 puts, so $97 away. Coin we did last week. I'm looking to re-enter hood. I had a big gap up here on news of a big investor stake, and I'm watching this. Let it just come in here. And I'm looking to sell out of the money $8 or $9 puts when I get a reversal bar on this. The Neuro here, I saw popping pre-market 461. Kind of looks like a bio, but that's sure ripping. Hog, I didn't see it being earnings, but this is a nasty gap. Hog is Harley Davidson motorcycles. Look at that. That is a monthly Head and Shoulders top. Gapping under the neckline. That's bearish. You don't see my screen? It's there. It's there. So not sure what you're saying thing. EBS 3365. So that's a nice gap, but it's big, so it's not a tier one. This little AMC, I just saw that it was positive, and we had a nice put spread on this in last weekend's letter. We closed it at 3 cents to take our profits with the market acting weird. And I'm going to keep it on my list, do another one. Winnebago, I don't know if this is earnings, but I saw this gap down. This is a bull sandwich and a downtrend on the daily. Look at this. Here's, you remember yesterday, MT Live, support, resistance, and voids. Here you go. So this closing breakdown, bull sandwich, another closing breakdown, and I got weekly, monthly void. That looks on the monthly there, looks like $40 is a normal target. Wow. But it's, so I'll keep it on the list. If it wasn't gapping, then that just would have been a nice clean entry under yesterday's low. BlackBerry earnings, no pattern. Kramer was talking about airlines today, just charging ridiculous prices. So I pulled up airlines. So sell setup, 180 reversal. And I obviously look at cruise ships, they're still dogging it. Boeing dogging it. Then I look at hotels, look at H. That's a closing breakdown. Hilton, wow. Wow, this all got whacked. We got to watch the hotel sector, you know. Snips had earnings, nice gap. Keep an eye on that for a put spread. Cisco is getting whacked here. Now this fits in the category. It's a nasty downtrend, daily, weekly, monthly, but it fits in the category of maybe excessive gap. Let's see if where the buyers step up. Look, it's gapping to $43. Well, let's see, 43 on the monthly still has room to fall. But 43 on the weekly is pretty extended, so we'll do nothing. Let's see what happens. You know, I told Greg pre-market, I said, wow, look at Schoen and X. Look at this thing gapping down 36 bucks. This thing was 60. I mean, it's just the time that this fell. Look at this. This is a weekly bar. So this is just 5 weeks. And this thing is just annihilated. Remember when everybody was commodities, boom. Here's X. Wow. Hawken earnings. I can't see where you're gapping in your light volume. I'm going to cancel you. BBWI, bed. Oh, Bed Bath. Oh. All right. So this one's gapping down. Possible gap and snap, because it's already down a bunch of bars far from the 20. So that's a gap and snap setup. Bravo Juliet here. I have in the middle window. That's a put spread idea, 30-minute high for tomorrow. Goose, 30-minute high also, gapping over this red bar. CPRT gapping up a little bit, but best case scenario, a little day trade, 5-10-minute high. WMS. It looks like he's slow to open up. Monroe, nasty gap down, but far from the 20. So I'm also looking to, within the first 30 minutes, let's, get a bias. 15-minute chart horsemen are still in downtrends, but my bias is to short puts, 30-minute high. That's my bias right now. Either 0 DTE, you got to use the SPX or E-minis. If you do 1 DTE, you can do spiders. Spiders, I'm just looking at premiums, the 115s for tomorrow. Oh, I'm sorry, that's Walmart. Never mind. Never mind. I was looking at Walmart. Wow, Walmart though for next week is $1.12. So yeah, I'm watching these retailers that got their clocks cleaned for put spreads. All right, spiders. I'm just getting a feel for the juice. So the 380s for tomorrow are $1.08 right now. That ain't bad. That ain't bad. Particularly if you don't mind owning it. 379 is 90 cents. I think I'm gonna do one of those. Oh shoot, I missed it. Shoot, I heard it kept dropping. Yep, these are this nice 5-minute perks here.